Welcome to Gulf Coast Financial with John Kuykendall, the CEO and founder of Gulf Coast Financial Services. This program is designed to assist you in bettering your retirement experience through expert and caring financial support. John has degrees from the University of Florida, Louisiana State University, and the Advanced Management Program at Harvard University. He spent 20 years in banking before establishing Gulf Coast Financial Services. John is a certified Kingdom advisor, serving clients with biblical principles and worldviews, and is an active member of the National Association of Christian Financial Consultants. John is also a member of many local charity boards. And now, John Kuykendall presents Gulf Coast Financial.
And welcome into the program. This is Gulf Coast Financial, brought to you by your resource for a common sense approach to planning for your financial and retirement future. The team from Gulf Coast Financial Services, and with us as always, we have founder and CEO John Kuykendall. John, welcome back in.
Thank you, Peter. It's great to be here. I hope you had a good week.
Always a pleasure. Yeah, I did, and I hope the same for you, although I know that you are in the process of recovering a little bit.
Yeah, I had a little back surgery a week or so ago, and I'm recovering. The one thing I learned is that we don't recover as quickly the older we get. So this one's taking a little longer, but we're working our way through it.
Well, I've got a 40th birthday coming up, and I'm realizing that as well, John. But not, yeah. I got a while to catch up. But
spring chicken, man, spring chicken.
Well, hey, John. Before the program, I was just mentioning, and we were looking on the website where I always find some outstanding resources. The website, by the way, gulfcoastfinancial.net, gulfcoastfinancial.net, and you all just published a great article. Now, you categorize this as a lifestyle article, but everything on your website sort of pertains to our financial planning and progress and good ideas for what we should be doing. Title of this one was Please Leave Home Without It. And just to kick off the show here, 10 items, 10 things that we should actually leave home without.
Well, that's right, Peter. And the first one is the one that we really don't think about, and that's our Social Security card. I don't know how many people right now would check their wallets. They're probably carrying in a laminated folder their Social Security card that they got when they were 7, 8, or 10 or whatever. With that Social Security card, I can do so many things against you. I can open new accounts. I have your address anyway. I can get that off the internet. I can get all of your information. And with that Social Security card, I can open accounts and do things that I can't do with any other card. So do what I do. Don't take it with you. Mine's locked up in my truck. I have certain cards that I carry with me because I have to have those in the event that I go to a doctor or I go to a hospital. And so the Social Security card is one of those that's with my truck at all times, locked up under protection. And if I guess my truck gets stolen, my Social Security card gets stolen, but they're not going to be able to get into it anyway. So the other thing was, how many times do we go on a trip and we've got 14 credit cards with us?
Yeah.
Yeah. I mean, we only need one credit card, carry two. I mean, I'll carry up my American Express, and then I'll carry one other card, a MasterCard or a Visa, just because not all small businesses accept American Express. How many you got?
Yeah, 8. I'm sitting here counting in my wallet, 8 different ones, John. Yeah.
And if you left today to go on a trip, you throw that wallet in your pocket and you go.
Yep. And then you lose the wallet, and you've got to secure all 8 different accounts there. That's a lot more time consuming than if you just have the one, I guess.
Right. And if you don't realize that you've lost one because you've got so many, then 2 or 3 months pass and all of a sudden somebody hits you. You'll realize that one day when you get scammed. And so leave those credit cards at home. Gift cards and certificates, we really don't need to take those. If you have a Starbucks or a card like that you're going to use, take it, but leave all the rest at home. They're just like cash.
I've got a designated pile of gift cards on my desk at the house, John, and these are ones that I've accumulated over
Mhm.
the last several years, many years actually, of birthdays and Christmases and events and just special occasions here and there. I get a gift card. But I couldn't even tell you how much money is probably sitting in that pile. I
Right.
never think about using them, and I ought to do something, regift them, or just make a conscious effort to use them at some point in time. But I would hate to take them all out and lose them because
Right.
that's a lot of money.
Right. And why not give them to a charity?
Yeah.
But the
Okay.
thing about it is during this recent pandemic we had with the COVID-19, the thing that came to mind most when I talked to people was, well, am I going to be able to use that gift card? Because
Mm.
that business may not come back. They may be may not out of business.
Yep.
Sears filed for bankruptcy. Some things have happened.
Oh, I've got a
So,
Toys R Us gift card in that pile. I know I do.
yeah.
Yep.
See, now if you'd have used that or donated it and letting somebody else have it, it would have already been used. The money would have gone. So that money is actually money that you've lost. Spare keys. We don't need to carry spare keys with us. I don't know why we do that. USB drives. I don't know many people that carry those, but I guess it's getting more and more common where we might have valuable information or maybe all of our passwords
Hmm.
on a USB drive, and we carry them with us in our briefcase. So then, in the event that we forget our passwords, we've got them there with us.
Yep.
That's as bad as having a folder on your computer labeled passwords
Passwords.
and losing your computer.
Yep. Yep. Or all of the passwords written down on a sheet of paper inside your wallet or something.
Right.
Yep.
Or pull out a debit card and there's the debit 4-digit debit number on the top of the card because you can't remember it. And I'm a victim of that myself. All of my passwords are the same. All of them. I hate to say that, but
Yeah.
but you have to figure out what they are. But the thing is, I've got a new debit card. They gave me a new number, and I can never remember that number. So the other day, I pulled it out, and I had written on a sticky note the number on top of that debit card. So I threw it away. The one thing you don't want to do is lose that. The other thing is passports. We don't want to carry our passports with us all the time. Leave
Sure.
them locked up at home. If you're going on a trip and you're going to need your passport out of country, then take it. But those are just some of the items. Business cards, consider a separate case and carry them in your pocket. Do not really want a thief to know where you work.
Yeah.
So they can get too much information. So there are 10 things on the website. Go look at them. Each one of them is explained in depth. The website has a lot of other valuable information about retirement, taxes, and planning.
Yeah. Yeah. If you go to the website, again, gulfcoastfinancial.net, under the blog, there are articles, there are past editions of the radio program. Under Resource Center, lots of different categories under retirement, estate, investment, insurance, tax, money, lifestyle, lots of resources there. Now, you guys updated your website towards the end of last year, and I just think it's robust. There's lots of tools, lots of resources, calculators, of course, your sister company, Gulf Coast Tax Advantage. So there's some tax planning ideas and resources on there as well. Again, gulfcoastfinancial.net. I encourage you, ladies and gentlemen, to make that at least a monthly visit. Maybe put it on your favorites bar there. Definitely subscribe to the podcasts there at the blog, but gulfcoastfinancial.net should be a regular visit for you. Or give a call if you do have questions or individual concerns that you would like to address of a financial nature. They do make their time available to you. 386-755-9018. 386-755-9018. John, great job on the website. You and your team should be commended.
Thank you, Peter. We're really excited about it. It was something that we decided last year that we needed to do. So we wanted a really robust, well-rounded website. It's not cheap, but the information on there is so valuable. I can't imagine not having that. So we're really excited about it.
Looking at the statistics kind of behind the curtain stuff here, John, I've seen the statistics on your website, and you've got something like 600% higher traffic and visitors than kind of the industry average. So, I think you're doing well, obviously there, based on those statistics.
Well, that's good to know because we don't realize that. Nobody gives us those numbers except when somebody like you does. And so we're glad to know that people are using it. We're really excited about it. It's a great piece.
Yep, and on your phone, on your mobile device, it's mobile friendly, of course. Tech savvy folks, you can go in, you can play with some calculators, some numbers. You can see how some plans are designed, and you can always read up to date and recent and updated articles. GulfCoastFinancial.net, GulfCoastFinancial.net, on the screen behind me here if you're watching today's version of the podcast of Gulf Coast Financial. And again, John Kuykendall and his team make their time available. Just give a call, 386-755-9018, if you have any kind of questions for them about your specific planning. Now, John, here along the east coast of the country, we're entering into a time of year that we all have got to pay attention to the news and to the Weather Channel. It's hurricane season. And I know that hurricanes are kind of funny in the way that they are both predictable and yet wildly unpredictable. We know that they are out there. We know that they're forming and sort of heading in a general direction, but it could hit anywhere from Cuba to Connecticut. The spaghetti map, don't really know. And they begin to build slowly and then intensify, and maybe the most dangerous is right on that eye wall. There's a period of time in the eye where it's calm and serene and peaceful, and then it gets very dangerous again on the backside of that eye wall, and then slowly fades. And that's kind of a parallel here of planning for and entering into retirement. We sort of know our general direction, don't know exactly which way it might head, and lots of risks along the way that seem to intensify as we get closer to retirement. The day we retire, we want to be peaceful and serene, but we quickly realize that there's just as many risks on the other side.
That's right, Peter. And there are a lot of things that can sabotage or have a storm that will affect your retirement. And what we try to do is buy that retirement income plan that we talk about, an income plan all the time. We want that income plan to really do make it a living, breathing organ that we're going to review every year up until we get ready to retire, and then review after we retire, because we want to do everything we can to keep those influences on the outside. And a lot of that is behavior. And so, how you behave before retirement and after retirement. You can't wait until the day of retirement and come in and say, okay, I've got $100,000 and I want to retire for the next 40 years, but I want to, let's put it in some stocks. That doesn't work. I mean, right. I don't know how many people recently have come in and said, hey, I've got this amount of money. That's all I got. Let's just throw it into some stocks and make a bunch of money.
Yeah.
Well, if I could do that, I wouldn't need you.
No, none of us would be showing up to work.
No.
But John, it's kind of the epitome of everything is fine until it's not. And if we don't learn from the past, we're doomed to repeat it, because it seems like when the market's going well, when there's growth in the economy and on Wall Street, the approach that I hear about is always invest in stocks and dividends for income in retirement. And then every time there's a downturn, it seems without fail, tech bubble, the Great Recession, even briefly in 2018, and certainly during the pandemic, we have to rethink this retirement dividend income strategy because it has failed us, subtext, yet again. And it's like, if it really worked so well, why would we see it continue to fail every time there's trouble? It works until it doesn't, and then we realize, so we may need to rethink that.
Oh, definitely. And I think we have been rethinking it. I think for several years now, those of us who have been working on the income planning have said that we need to have separate, definable, consistent, predictable income that's going to come in addition to Social Security. We're not going to have pensions. So we need to figure out how much we've got in Social Security, how much are we going to get that we can get some way that I know I can't outlive an income, and then take the difference and make it my growth bucket. But so many times, all I want to do is have my growth bucket, and I'm betting everything on the market. And the market, it will be great in most cases, unless you need to retire at the time it's not. And so you take the people that retired just recently when we had the 30% downturn. Luckily, this one came back very quickly, so they weren't hurt as bad. If we went back to 2008, 2009, and we were 18 months.
Took like what, 5 or 6 years to recover fully from that, didn't it?
Fully. But the thing is I'm drawing money out of that retirement account if I'm retired, while it's trying to grow, it'll never grow. So we have to have a better way to do it. We can't continue to think that I can put all of my money in the stock market and the stock market's going to give me a return to live on.
Now, not that there's anything wrong with dividends, right? I mean, that's part of what you can help somebody achieve and accomplish, but it probably shouldn't be what we are relying on being there dependably for us year in, year out throughout retirement.
No, and don't forget that Ford had a great dividend until this last downturn.
Right.
And then they had no dividend.
And John, just to back up a little bit, to explain dividends, if I buy a stock, I am part owner of that company. And as an owner of a company, I would hope that the value of the company goes up over time, i.e. a growth in the share price. But also as an owner, I expect to be paid some of the profits of that company. And that's what dividends are. But in a year like 2020, when the market goes down, the value of many companies go down, they also may not be profitable that year. There's going to be a lot of companies that are not profitable in 2020, even strong companies that are going to withstand this and continue on and be profitable maybe again in future years. This year, they may not be. So the problem is it's a double whammy, is that the value of the company goes down at the same time they're not profitable. So a retiree who is dependent upon the income from those dividends gets their income cut and at the same time has less capital to go back out and search for other options to try to recreate that income.
That's right. And so you got a double whammy there where I've lost value, I've lost my ability to grow my portfolio, and I've lost my income. So we can't totally depend on dividends. We have to have more of a plan that's diversified and that gives me a well-rounded, permanent, predictable income. I know where I'm going to get my income, and let my growth bucket, the bucket that's going to grow me a value, put it into the market, let it grow. It can be part of the dividend portfolio, but it's based more on growth. And as it grows, it will take care of inflation. So that's the way a plan needs to be structured, Peter. This stuff about, put all your money in the market and just leave it alone. Don't watch your statements. Don't bother your statements. Just put it in there and let it go. That doesn't work anymore.
Well, don't worry. It's just a paper loss, right?
Yeah. Yeah. It's a paper loss until you sell it.
Yeah, well, I count on that paper coming in every month so that I can go out and spend it. And now I don't have enough of it is unfortunately the result and the realization that many are coming to here. And John, if we need that income, we have to sell when things are down, and that compounds on the losses, removes dollars' ability to participate in any kind of recovery. That accelerates the rate that we run out of money. And that's why income planning, the way that you structure it there at Gulf Coast Financial Services is such a vital component of the overall plan, and why you stress it being included in that planning process.
Oh, that's right, Peter, because what we're going to look is a whole portfolio. We're going to look at all of the income sources. We're going to structure income sources so we know that they're going to be there. And then we're going to take that growth bucket and let that growth bucket supplement that, and then be our hedge for inflation, and also our hedge for our early years in retirement when we want to travel and do the things we want to do. Also looking at taxes, looking at Social Security maximization, tax planning, looking at everything that you can think of that's conceivable that goes into a plan that will give you the best plan ever. One of the reasons that this 4% rule and all these other things that we talk about are coming up now is this is the first group of people in history who retired that are really facing a problem using those rules, because the prior generation had pensions. I mean, you got to remember, they had enough checks coming in, they were saving some of their checks.
And then in the 70s, Wall Street lobby money helped to pass and fund the ERISA bill, which had the ability for us to invest in 401ks, and slowly pensions went away and we were told to take more risk. It's funny, John, that as we have increased the level of risk that we are taking with our investments, the security of retirement has gone away. We don't have the same security because we're taking more risk with our money.
Right. And that's something that we've been taught. And so what we have to do now is forget about all this other stuff. Think about income planning, looking at Social Security, looking at how can I get a defined check in the mail every month for life, looking at how am I going to grow my assets, tax planning, all the other assets, how we're going to meld everything into one plan, monitor it, control it, and work it through as long as we live.
Well, that's part of the income planning process, which is in turn part of the larger comprehensive planning process that they take there at Gulf Coast Financial Services. And there is no benefit for procrastinating, ladies and gentlemen. There is no downside to placing the call. There's no need to meet in person to get answers to your questions or get the process started of having that plan in place. You can do that over the phone or through the convenience of technology with virtual meetings. They are fully equipped to help you there at Gulf Coast Financial Services, but you've got to take that first step. Pick up the phone, give a call, 386-755-9018, 386-755-9018, 386-755-9018. John, another one of the traditional methods that I hear about that people seem to celebrate in down times. Like, this is the other side of the dividend producing stocks. People say that, hey, this is the method that saved me when the market was down, was that I have been keeping several years worth of expenses in cash. To me, John, liquidity is obviously important. We've got to have liquidity, and for some of our money, safety is obviously important. But keeping several years worth of expenses in cash just in case there's a downturn seems to me like there's a lot of opportunity cost to that, and some risks in and of itself of losing money safely over a long period of time.
Well, the thing about it is that a lot of the people that, when I first got into banking in the 70s, people were talking about CDs and savings. Everybody wanted a FDIC insured certificate of deposit because they were safe, backed by the government.
And paying double digits.
Yeah, I mean, some that's right. It's 18% at one point. But the thing is that now with rates at all-time lows, I just read that the average mortgage loan now is 3.22%. So with that, you can imagine the bank can't afford to pay you a lot of money on the money that you're giving them. So why would you have 2 years of expenses sitting in cash or sitting in a CD or savings in a bank earning you nothing? But it's inflation every year is 1%, 2%, 3%, whatever your number is that you believe it is. Some are higher than others, but you're losing money. So it's a way to have your lazy money become less. So what you need to do is figure out how we can safely invest that money so that we get a return on it, but we don't have to leave it there and sit in the bank and get nothing.
Yeah. Well, I know at Gulf Coast Financial Services, one of your missions and motivations is to help people find ways to leverage their money, to be more efficient with their money. And certainly there are ways, ladies and gentlemen, to have safety for your principal, to have accessibility, liquidity in an appropriate amount, and still have the opportunity for growth above and beyond these low interest rates that we are seeing in bank checking, savings, CD accounts. If you'd like to find out about how to earn a little bit more on your money, even if it is your keep your powder dry money and your what if there's a market downturn money, pick up the phone, give John Kuykendall and Gulf Coast Financial Services a call, 386-755-9018, 386-755-9018. I think final point we've got time to touch on today's program, John, is another area that you help people to be more efficient and leverage is in the taxes. Now, if we can be efficient with our taxes and pay less, oftentimes that is just as effective and with far less risk than chasing higher returns in the market.
Yeah, that's right, Peter. And what we want to do is make sure that we get all the tax write-offs that we can get, the tax advantages that we can get, and that we're paying what we should pay, but we're not paying more than that. And with this, with this new Secure Act, there are some things in there that are going to be very important. Now we kind of got waylaid by the COVID-19, so we didn't. Secure Act came out in January 1st, so we kind of put it on the back burner. But now's the time to ramp it back up. Do you realize that under that act, first of all, 100% of your charitable contributions this year are deductible? So there may be some ways that you can make a charitable contribution at the same time create a legacy for your family. Those are some of the things that we're looking at right now. But there are other things in there, as well as the fact that we don't have to do the minimum distributions this year if you're over 72. So why not take advantage of those tax planning ideas? Give us a call and let's see if we can help you. If you're in the middle of planning, we want to look at your taxes. We're going to look at taxes, Social Security, all your income sources, and all your investments. That's just part of what we do.
386-755-9018, the number to reach Gulf Coast Financial Services. Voted best of the best in financial services by the Lake City Reporter, Office of Convenience in Gainesville. But again, no need to meet in person to get answers to your questions, to get the process started. They can and are fully capable of helping to assist, answer questions, even conduct that thorough, comprehensive review over the phone with technology, doing virtual meetings. Get the process started. No benefit in procrastinating. No downside to placing the call. 386-755-9018. No cost for the review, the analysis, and the strategy session. Complimentary, John. It's just a service as an extension of this radio program and podcast.
That's right, Peter. That's what we want to do is make sure that the people that are listening, that we're giving them the help we can give them.
386-755-9018 or visit online, gulfcoastfinancial.com. Again, great website, lots of resources, packed full of information, calculators, tools for you to use. Informed people make better decisions. Get the information, start there, gulfcoastfinancial.net, or by giving a call, 386-755-9018. John, we always appreciate your time. Thank you for being here as a consistent guide and voice of reason and common sense.
Thank you, Peter. It was great being here. Hopefully next week I'll be on a little bit more on the mend.
All right. We definitely wish you well, speedy, full recovery, and we'll look forward to talking with you again next week.
Thank you.
Take care.
The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC. Kovac Securities, found online at www.kovac. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc.